Okay, so let's start. We want to start a new topic, and our new topic is called Books of Original Entry. Books of Original Entry. We also call them Daybooks. So let me introduce it. Now, what we have been looking at, how to record transactions in the books of accounts. That's what we have been looking at. How to record transactions in the books. Of course, using the rules of double entry, debiting this account, crediting this account, all that we know now. Okay. But then, before a company or before a business records a transaction in the accounts, listen, before a transaction is recorded in an account, it is normally required that that transaction should first be recorded in another book, which we call a book of original entry, before it is transferred to the accounts. It should first be recorded somewhere. That which is first to be recorded, where it is first to be recorded, we call it a book of original entry. We also call them daybooks. Okay? We also call them journals. So, before a transaction is recorded in an account, it should be recorded first in a daybook. Then that transaction will be transferred now to the account using the rules of double entry. Good. So, these books of original entry are not accounts. These are books where a transaction is first recorded before it is transferred to a ledger account. Okay. Now, there are various types of books of original entry. There are various types of books of original entry, and each type of the book has its own purpose. That we have different types of books of original entry, or what we call daybooks, and each book has its own purpose. One of the daybooks is what we call the sales daybook. We also call it the sales journal. We use this sales journal. Maybe before I give the purpose of each, let me give the names first. Let me give the names of the journals. The second type of journal is what we call the purchases daybook. We have also said it's also called the purchases journal. Let me just call it journal. So let me just call this one purchases journal. You can call it purchases daybook or journal. Another daybook is what we call the sales return journal. The sales return. And by the way, I do hope you remember when we were looking at the concept of sales returns, we also said another name for return. Sales return is called what? Another name for return. Sales return is called what? What's another name? When we were looking at the rules of double entry, and of course by now, you should be able to remember. We said a sales return is also called return inwards. Return inwards. So you may have what we call return inwards journal or daybook. Okay? When a customer returns goods back into the business, these are goods you had sold. When he returns them back into the business, we call it sales return. We also call it return inwards. When a customer returns goods back into the business, we call them return inwards. Good. Number 4. The other journal or another daybook is what we call purchases return journal. Purchases return journal, or we also call it return outwards. Return outwards journal or daybook. Return out was journal or daybook. Okay, that's another one. Good. Number 5, we have what we call the cash book. The cash book. Of course, you know by now. You know a cash book is a book that contains which account? A cash book is a book that contains which account? 2 accounts. One, the cash account and the bank account. You know we normally have what we call a 2-column cash book and a 3-column cash book. And the 2 main accounts there, or the 2 main columns there, is the cash column and the bank column. So when we say a cash book, we are referring to the cash account and the bank account. Are you there? Good. So it's a book of original entry. We normally consider it as a book of original entry. Then number 6, we have what we call the general journal. The general journal. So these are the different books of original entry. These are the different books of original entry. Each book has its own purpose. Each book has its own purpose. It's obvious, as I've been listing, some of you can even now tell, some of you can tell what are the purpose of some of these. Some of you can tell now what are the purpose of some of these journals. Okay? From the name itself, it can tell you. But let us now mention what is the purpose of each journal. What is the purpose of each journal? Now, I have told you, listen, before a transaction is recorded in a ledger account, that transaction should first be recorded in a daybook, or what we call a book of original entry. Sawa. Good. Now, a sales daybook is used. We normally use this sales daybook to record any transaction or any goods sold on credit, not by cash. If you sell goods by cash, you first record that transaction in a cash book. But when you sell goods on credit, that transaction, before you take it to the debtors account, listen, when you sell goods on credit, you know the double entry. You normally debit debtors and you normally credit sales. You know the rules of double entry. When you sell goods on credit, your sales are increasing. So your revenue is increasing. The rule says you credit. Your debtors are also increasing. We did not have a debtor before, but now that you have sold goods on credit, our debtors have gone up. You have created a debtor. When debtors increase, a debtor is an asset. The rule says you debit. So before you debit sales, before you debit debtor, and before you credit sales, that transaction should first be recorded in a sales daybook. So we use the sales daybook to record what? To record credit what? Credit sales. That is the purpose of that book. To record all credit sales. So anytime you sell goods on credit, first record it in the sales daybook. Good. Purchases daybook. Again, we use it to record any credit purchases. Listen, not cash purchases. When you purchase goods by cash, you as a business, you record it in the cash book. But when you purchase goods on credit, we record it in the purchases daybook, or what we are calling the purchases journal. So we are using this one to record credit purchases. Whenever you purchase goods on credit, you record it first in the purchases daybook. So we use it to record it, the credit purchases. We use it to record it, the credit purchases. That is it. Good. Number 3, sales returns, or what we are calling return inwards journal. From the name, what do you think? It is obvious. It is a book that is used to record what? All goods returned by customers. You sold goods on credit, for example, under number 1, journal. When you sold goods on credit to Kamau or Wekesa, and for whatever reason, Wekesa is returning them. Listen, you know that. Listen, if you sold goods on credit, let me just give you the double entry here. When you sold goods to Kamau on credit, you must have debited Kamau as a debtor by maybe 2,000. Kamau being a debtor, our debtors were increasing, so you must have debited debtors, you must have credited sales. If for whatever reason, Kamau returned goods back into the business, goods worth maybe 100 or 500, of course you should reduce, listen, you should reduce what Kamau owes us. We have sold goods to him on credit for 2,000, we have debited Kamau, and we have credited sales. Now, for whatever reason, maybe these goods were more than he needed or some were damaged. What will he do? He will return them. When he returns them, then he no longer owes us 2,000, he owes us less. So you will have to reduce what he owes us. How? By crediting. To reduce the data you credit, let's say 500. Now, we are also saying, and I hope you still remember, listen, we sold goods to him for 2,000. We must have debited debtors of Kamau. We must have credited sales. For whatever reason, he returned goods worth 500. You also know our revenues have reduced. Listen, but I know you know from the double entry topic that we discussed that when a customer returns goods back into the business, you don't reduce the sales directly. I hope you remember, we don't reduce the sales account directly. We said you reduce the sales, yes, but through an account called sales return account, or what we call a return inwards account. So if a customer returns goods sold to him, you normally have to debit this account called return inwards by 500 and you credit data. This is sales return, or what we call return inwards. Return inwards. That's the double entry. That when a customer returns goods back into the business, you normally have to reduce what he owes us. How do you reduce it? By crediting his account, and you debit an account called return inwards. This one we have discussed when we were discussing the double entry concept. Good. But now, listen again. Before you come and debit this account called return inwards, and before you come and credit this account called debtors of Kamau, this transaction must first be recorded in a day book, or what we are calling a book of original entry. Book of original entry. So before we do that, we have recorded that transaction where? In this account called return inwards journal, or what we are calling the sales return journal. So what is it used for? It records what? It records all goods returned by debtors. To record goods returned, to record goods returned by debtors. When a customer returns goods back into the business, before you go reduce what he owes us in the account, first record it in the day book. That's the purpose of that book, to record goods returned by debtors. Okay, good. Next, purchases return journal, or what we call return outwards journal. Now, you are the businessman who bought the goods on credit. Let us assume you bought goods from credit from a creditor called Wekesa. When you purchase goods on credit, you normally debit purchases. Don't forget, we have already discussed the double entry. You normally debit purchases. Let's again say 2,000, and you credit the creditor. Our creditor is called Wekesa. You come and credit. That's the double entry. But of course I know, listen, before you debited Wekesa, before you debited purchases, and before you credited Wekesa, that transaction was first recorded in which book? That transaction was first recorded in which book? On the book we have called Purchases Journal or Purchases Daybook. Are you there? We have said it is used to record all the credit purchases. Nisawa. That's number two, sorry. All credit purchases were recorded first in the purchases daybook or journal. Now that Wekesa has returned or is returning some of the goods, I am supposed to reduce, me as a business, how much I owe Wekesa. Our liability to him went up when I bought it. You know that. That's the rule. Our liability went up. When you bought the goods on credit, you owe Wekesa. And whenever a liability goes up, the rule says you do what? You credit. That's the rule of double entry. That's what I did. But for whatever reason, again, Wekesa is returning some of these goods. Maybe they are damaged. Maybe they are more than the Wekesa needed. So he's returning them back into the business. Okay? No, sorry. Not returning. We are the ones returning. Sorry. We have purchased. Now let me explain. We have purchased goods from Wekesa. Sorry. We owe Wekesa. So our liability to Wekesa went up. For whatever reason, they are more than we needed. Now I'm correct. They are more than we needed. So we are forced to return some of the goods, maybe amounting to 500. When I return goods back to the Wekesa, then I am supposed to reduce what I owe Wekesa. To reduce a liability, you debit. So I'm supposed to debit liability called Wekesa or a creditor. Of course, I'm supposed to credit purchases. But of course, again, from the rules of double entry, you remember, we said you're not supposed to credit purchases directly. You're supposed to credit an account called what? Purchases return, or what we were calling return outwards. What we were calling return outwards. You normally debit creditors, which I've done, and I credit return outwards, and I come and say here, 500. So that's the double entry. That when you return goods to your supplier, you as a business, you are returning goods out of the business. Okay? So before you come and reduce your creditor called Wekesa here, and before you credit this account we are calling return outwards, or the account we are calling purchases returns, we are saying before you record it in this account, you must record it in a daybook. And that daybook is what we are calling purchases return daybook, or what we are calling return outwards daybook. So this book is used to record, what we call goods returned to creditors. Goods that you as a business, you are returning to your creditors. Good. That's okay. I hope you are getting that. Good. Next, cash book. Of course, I told you cash book has two accounts. It has the cash account and the bank account. So we normally use cash book to record all transactions by cash or by check. Any transaction that was made by cash or by check. If it was made by cash, you record it in the column of the cash book, of the cash column in the cash book. If the payment or the receipt, or it could be a payment or it could be a receipt by check, you record it in the bank column of the cash book. So we normally use this book to record all transactions that were made by cash or by check. That's what we use the cash book for. Good. Next, general journal. Now listen. You as a business, you may have a transaction. That cannot be recorded in any of the above daybooks. Think of a transaction that you cannot record it in the sales daybook. It can't be recorded in the purchases daybook. It can't be recorded in the sales return daybook. It can't be recorded in the purchases return daybook. It can't be recorded in the cash book. So the only place where you can first record that transaction before you record it in the books, in the accounts, the first place to record is in the general journal. Okay, so this book is used to record any other transaction. To record any other transaction which cannot be recorded. To record any other transaction which cannot be recorded in other daybooks. Good. I hope by now you have thought of a transaction. Assuming you purchased your motor vehicle from General Motors on credit. If you purchase a motor vehicle on credit, can you record it in the purchases daybook? You bought a motor vehicle, not goods. You bought a motor vehicle. Can you record that transaction in the purchases daybook? No. I have said purchases daybook is used to record goods. Here, purchases journal to record goods purchased. Maybe we can even say this to record credit purchases, or maybe we could put it this way, to record goods purchased on credit. To record goods purchased on credit. Maybe that's a better term. To record goods purchased on credit. That is to say, credit purchases. Says daybook, we can put it correctly. In other words, let me put it this way. To record goods sold on credit. To record goods sold on credit. Good. So my question was, if you buy a motor vehicle on credit, do you record it in the purchases daybook? No. Why? Because it's not a good. It's a fixed asset. Two, though you are purchasing it, you can't record it in the cash book. Why? Because you are buying it on credit from General Motor. If you had bought the motor vehicle by cash, then record it in the cash book. But here you are buying a motor vehicle on credit. That transaction cannot be recorded anywhere in any other journal first. So you have to record it in the general journal. In the general journal. What if again you sold your motor vehicle on credit? Not by cash. You sold your motor vehicle on credit. You sold your motor vehicle on credit. If you sold your motor vehicle on credit, then you can't record it in the sales daybook, because these are motor vehicle, not a good. Okay? Neither can you record it in the cash book. You are not selling it by cash. You are selling it on credit. If you are selling it by cash, then you record it in the cash book. Good. You can see what examples I'm giving of transactions that could be recorded in the general journal. Listen. If you make an error in the recording, if you record or you commit an error in the recording of transactions, if you commit an error in the recording of the transactions, let me say a minute, just a minute. Just a minute, what's happening here? Because this is deleted. Okay, let me just delete here so that it doesn't mess up with your view. Okay, fine. So I'm saying another use of the general journal. When you commit an error, whichever error you have recorded or you have done in your books, that error, before you go to the account, and correct the error, that error should first be corrected in a journal. That's another use of the general journal. Good. Sorry, this is omitted again. So I say to record goods purchased, a goods sold. This is to record goods sold on credit. Good. Now, let me explain now. So now you know, listen, now you know the purpose of each of the day books. Now, every transaction, listen carefully, every transaction that is recorded in a day book, that information must come from somewhere. There must be a document that tells you now you are selling or you have sold goods on credit. This is the information. You'll pick the information from where. In other words, what is the supporting document? Even by now, I could be asking you that question. When you sell goods on credit to your customers, what do you give them as a document to show you have sold goods on credit? Listen, when you purchase goods when you sell goods by cash, listen, when you go to a shop and you buy goods by cash, you're given a receipt. We call it a cash receipt. That's a document. When you purchase goods on credit, what are you normally given? Or when you sell goods on credit, what do you give out to your customer? You don't give them a receipt. A cash receipt is only given when you're selling goods on credit, on cash, sorry. But when you sell goods on credit, you normally give a document we call an invoice to your customer. Okay? So now listen. So what I'm trying to say is that each of these books, where you are getting that information from, so that you record that transaction in the book, that document where you're getting the information from, we call it the source document. So if I may have another column here to identify what we call the source document for each of these books, where do you get the information from for you to record a credit sales in the sales day book? Where did you get that information as an accountant? You must have got it from the invoice that was given to the customer. So the source of the information there is what we call what? The invoice. That is the invoice that you have given to your customer. Are you there? Whenever you sell goods on credit, you give them an invoice. Good. What is the source document or the source of the information document from where you record in the purchases journal? When you purchase goods on credit from your supplier, they are the ones to give you, they give you what we call an invoice. Just like you gave an invoice when you sold goods on credit, now you are buying on credit, they will also give you an invoice. So the information your accountant will use to record in this book, again, is a document we call an invoice. But don't forget about the two invoices. One is the invoice you are sending to your customer, the first one, and the second one is the invoice you are receiving from who? From suppliers. So this is invoice given to customers. Invoice given to who? To customer. This is invoice received from suppliers. Are you there? Invoice received from suppliers. That's the document. Okay? Good. Next. Now listen again. Now listen. Third book is what we were calling the sales return day book, or what we were calling the return invoice day book. Listen, I take you down here. I told you, I sold goods to Kamau. When I sold goods to him, I debited Kamau and I credited sales. That means I was demanding 2,000 shillings from Kamau. For whatever reason, Kamau will, if he returns goods worth 500, that's what we said, I will have to reduce what Kamau owes us. To reduce what a debtor owes you, you have to credit his account. And of course, we have agreed you debit an account called return inwards, or what we also call sales returns account. But now, listen, the source of information for this 500, so that you as an accountant, you come and credit Kamau here to reduce what he owes you, and you have your sales return account debited. Where did you get that information from? The source of that information is what we call, listen, we call it a credit note. So when Kamau returns goods, listen, when Kamau returns goods back into the business, you as a businessman, you will give him what we call a credit note, telling him, listen, it is telling him that you are going to credit his account here. You are going to credit his account so that you reduce what he owes you. That's why we call it a credit note. So the source document for the book we are calling Return Inwards Daybook, or what we are calling a sales return daybook, is what we call the source document. There is a document we are calling credit note. You gave a credit note to your customer. When he returns goods, don't forget, when you sold to him, you debited his account to charge him. Now that he's returning him some goods, you will give him a credit note telling him that you are going to reduce or to credit his account by the amount he's returning. Good. Next, number 4. What is the source document for purchases returns, or what we are calling Return Outwards Daybook? Before I go there, I told you we use it to record what? We use it to record goods returned to who? To creditors or suppliers. But before we do that, I told you here, when you purchase goods on credit from Wekesa worth 2,000, I showed you here, you debited purchases and you credited creditors. Why? Creditor is a liability. This is creditor called Wekesa. Your liability to him went up when you purchased goods on credit from him. Now, if for whatever reason, we as a company, we are returning some of the goods to Wekesa, then we need to reduce what? We need to reduce what we owe Wekesa. To reduce what we owe to Wekesa, we come and debit. Whenever liability reduces, you debit. That's a rule. Okay? And of course, we agreed you credit an account called Return Outwards. But the question is this: where do you get the information from for you to debit Wekesa and for you to credit Return Outwards? Now listen, here we are debiting the account of Wekesa. We are debiting the account of Wekesa. Now, it means now we shall receive what we call a debit note. This time we shall receive a debit note, so that you debit the account of Wekesa, you will receive a debit note from Wekesa. Okay? So the source document for that third one, number 4, sorry, the source document for this is what we call the debit note. It is telling you, because you are increasing what you owe to Wekesa when you purchase goods on credit. Now that you are returning some of those goods, you reduce what you owe to Wekesa. So to reduce what you owe to Wekesa, you must debit his account. So the source document for that is what we call a debit note. Are you there? Good. Now, I am quoting the source documents because some questions ask you to state the documents that are used in extracting the information that you need for the purpose of recording in these books. Okay, good. Now we go to the second last, that is the cash book. That is the cash book. Where do you get the information from? Yes, we have said the cash book is used to record all the cash transactions and the check transactions. So where do you get that information from? Obvious, you will get that information from the cash receipts. That's where you get the information from. Remember, you wrote a receipt. When you sold goods on cash, you must have given a customer receipt. Or we used their check. That's another source document. Or you can use bank statement. It's also coming from the bank. Source of information. Don't forget, listen, we have done the topic called bank reconciliation. How to update the cash book with those items appearing in the bank statement but not in the cash book. Good. So you come and use also, you can use the bank statement as a source document to get the information where you will use to record in the cash book. So we are saying the source document for the cash book can be a receipt, cash receipt, or a check, or bank statement, or any other relevant document that was prepared out of the cash transaction. Good. Number 6, for the general journal, the source document there is normally referred to as any document, listen, any document prepared by the accountant, Any document prepared by accountant. There is a document whenever either you are purchasing goods or purchasing a motor vehicle, a document will be prepared. So here is any document that shows where that information is coming from. We are saying any document prepared by accountant. Okay, good. Now, so before, listen to this now, before we move on, I want us to put down that information. I want us to put down that information now. I want us to put down that information. So maybe I could even put it in the form of a table. Let me put it in form of a table. Then you will copy. Let me put it in form of a table. Let me put it in form of a table. I'm not rubbing. So this is the day book. That is the day book. This is the purpose of the day book. And the source document. Good. Maybe you can now copy first up to there. Let me just move down. Let me just move down so that you copy it. Yangu may not be very accurate, but I think what you can do, you can prepare the table first before you start filling it. You can prepare the table first before you start filling it. Okay? So then you come and say that's number 1, that's number 2, this is number 3, this is number 4, this is number 5, and the last one, number 6. Okay, so let's put down those journals. So have a column for day book, have a column for the day book, have a column for purpose. This is purpose of the day book, and have a last column called source document. Source document. Be a bit faster. Be a bit faster. We want to continue. So we are saying have the 3 columns: day book, source purpose, and source document. Okay. The first one we have said is the sales day book. We also call it the sales journal. We have agreed the purpose there is to record goods. This is goods, not good. You can add their goods sold on credit. To record goods sold on credit. Then you have another column for the last column, source document. You call it invoice given to customers. Invoice given to customers. Invoice given to customers. Are you there? Hope so. Good. Then you go to number 2 now. Go to number 2 now. Number 2, you call it purchases daybook, or what we are calling it journal. Purchases journal. The purpose is to record goods purchased on credit. To record goods purchased on credit. Then the document is what we are calling invoice received from suppliers. Invoice received from suppliers. Good. That's number 2. I hope you are through with that number 2. We now go to number 3. What we are calling the sales return, or what we are calling return inwards journal. Sales return, we also call it return inwards journal or daybook, whatever it is. Good. Okay. Second column for it, to record goods returned by debtors. To record goods returned by debtors. Are you there? Good. Okay, we move on. Next column for it, what is the source document for return inwards daybook? We have said it's a credit note. When a customer returns goods to the business, you reduce what he owes you by crediting his account. So you give him a credit note. So, good. We go to number 4. We are calling it purchases return, or what we call return outwards journal. That is purchases return outwards journal. Purpose is to record, that's the second column for it, to record goods returned to creditors. Hope you have written that. To record goods returned to creditors. Okay. Then finally, the last column for it, what is the source document? We call it the debit note. I've explained why the debit note, because you are going to reduce what you owe to your supplier. To reduce, you go debit the supplier's account or your creditor's account. That's why you call it a debit note. Good. That's number 4. I hope you are through. I hope you are through with number 4. We go to number 5 now. We go to number 5. Number 5 is what we are calling the cash book. What we are calling the cash book. Then you have the column to record all transactions by cash stroke check. All transactions by cash stroke check. Good. The source document and the cash receipt, check, bank statement, etc. There you can add etc. because it can be many. There could be many other documents that create a cash transaction. So we are saying cash receipts, checks, bank statement, etc. Good. Number 6, general journal. General journal. Then a column for it, the second column, to record any other transaction. Put it that way. To record any other transaction which cannot be recorded. Sorry, this is supposed to be which cannot be recorded. This is supposed to be which cannot be recorded in any other daybook. In any other daybook. To record any other transaction which cannot be recorded in any other daybook. In any other daybook. Okay. Then the last column for it is the source document. You can call it, we are saying, any document prepared by accountants. Any document prepared by accountant. Maybe it's a voucher, the payment voucher, whatever they call it. We may have a company calling it a payment voucher, whatever it's called by the company. But any document prepared by the accountant, whether it's a purchases voucher, maybe you are purchasing a motor vehicle on credit and you are given a voucher, whatever it is. Good. Now you know, listen, now you know what are the day books. Now finish. I want to proceed now. We want to look at how do they appear. How do they appear? How do they appear? Okay, now listen. Now listen. Now, I hope you're through. Okay, now listen. For the first four, that is the sales day book. Don't write. Let me explain first. For the first four, the day book, sales day book, purchases day book, sales return day book, and the purchases return day book, those four have the same format. We are not going to look at, listen, we are not going to look at the format of the cash book. We have already done cash book as a topic of its own. We did a 2-column cash book. We did a 3-column cash book. So already you know the format of the cash book. We don't have to do it again. We have done the topic cash book because it's a topic on its own in your syllabus. Okay? Good. So we have done the cash book. So, but I've said the sales day book, the purchases day book, the sales return day book, and the purchases return day book, those four have the same format. Then the general journal has its own format. So let me show the format of the first four, whether it's a sales day book or it is a purchases day book, whatever it is. Now listen. Normally, it has various columns, not account. These are not accounts. These are columns. It has various columns. One column is for the date, particulars, or what we can call details. Then you have a column here called folio and amount. This could be like a sales day book. Let us assume, for example, it's a sales day book. When I sell goods to Kamau on credit, for example, I'll come and say here, which date? 1st January. Then I'll put the particulars, maybe Kamau or Wekesa, or maybe I'm selling to Njokoril, whoever it is I'm selling to, put the name there. Now, listen, I've told you, listen carefully, I've told you, before you record that transaction in account of Kamau, because I told you when I sell goods to Kamau here, I have to debit Kamau's account. So where can I locate, listen, where can I go and get that account of Kamau? That account of Kamau is in a book or in an account somewhere or in a ledger somewhere. That ledger which contains the account of Kamau. Before a transaction is recorded in a ledger account, it first must be recorded in a day book, which we have done. But in this same day book, you may want to tell whoever looks at it, if he wants to go and look at the account of Kamau, where can he get it? That's what you refer to him under the column of folio, where he can easily go and get the account of Kamau. We shall discuss the ledgers later in a short while. But in one of the ledgers, that's where you can find the account of Kamau. Maybe it's in page 5 of that ledger, or page 6 of the ledger. So if it's in the page 5, you say here, for example, sales ledger, page 5. I will talk about that later. But for exam purposes, normally that's not important. When they tell you to prepare a sales day book, what the column the examiner wants to see is the column of the date, particulars, and the amount. Maybe the amount is 2,000 shillings. So you will record all of them, whoever you sold goods to on credit, maybe for that month, get the totals. Listen, these totals here, you transfer them. Listen carefully. You transfer them. That is the total sales here. You transfer them to the sales account. I want you to listen. You transfer them to the sales account as a single amount. You sold goods on credit to Kamau. You must have debited Kamau here. I told you, you will have to credit the account of what? Sales. So, but now, we don't credit sales account every time you sell, every time you sell, every time you sell, every time you sell. No. But for the account of Kamau, you must enter. The account of Koril, you must enter, maybe sold to him. You must enter the account of Wekesa if you sold to him. So for the individual accounts, you must enter. But for the total sales of that month, maybe the total sales are 40,000 here. So you will be debiting the account of Kamau, the account of Wekesa, the account of Koril, and so on. But the total of 40,000, you will take it to the sales account as a single amount by the end of every month. Or if you want to be posting every week, it is your policy as a company. But that's what we're saying. So this is the format of a day book by the name of sales day book. It could be the purchases day book, where you are purchasing goods on credit from Kamau. So you come and debit, I show the account, show the amount. Folio, I've said, where can I locate the account of Kamau? Listen, where will I be able to locate the account of Kamau as a creditor? We are purchasing goods now from Kamau or Wekesa as a creditor. Where can I get that account if I want to look at it? It is through this folio that you refer somebody to where he can easily locate it. Okay? Good. We shall talk about, but I've told you, of course, we are going to talk about the various ledgers, but here the examiner will not look at what you tell him, because he will not ask you to pick the actual ledger that you have. No. Good. But you look at the column of amount, particulars, whatever, and maybe the date, because he will give you the date. Okay? Good. So for the purchases day book, I've told you, the sales day book, return inwards day book, they have that. Listen. Then the totals of the day book is what I'm trying to emphasize. You transfer them. If it is the sales day book, you transfer it to the sales account. If it is the purchases day book, remember you credited Wekesa as a creditor here. When you purchase goods on credit, we said you normally debit purchases, you normally credit the creditor here. But again, if you also purchase from Koril, you must have credited Koril's account. If you purchase from who? Maybe Wanyonyi, you must have credited Wanyonyi's account. But then you are supposed to be debiting purchases. Again, by the end of the week or by the end of the month, take this total of purchases, come and debit purchases here with the total 40,000. You have still followed the double entry, but it's only that you want to post the total of purchases every month. But the double entry, you have followed it. It could be returned outwards. It could be returned inwards. That's what we are trying to say. So the format of the form is the same. Then I've told you, listen, I've told you the general journal. Maybe before we go there, andika hivi. Maybe before we go there, andika hapo chini NB. Then you say this. The following is the format. The following is the format. Put it down. The following is the format of the sales journal, comma, The following is the format of the sales journal. Purchases journal, comma. Following is the format of the sales journal, comma. Purchases journal, comma. Return inwards journal, and return outwards 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 journal. Okay, so just have it like this. Let me just rub the names. Copy it just this way. We are not putting in the names of any person now. No. But just show the column. Then you come and show the particulars. Then you show the folio and amount. Date, particulars, folio, and amount. Okay? That is the format of the first four. Then I've told you, for the cash book, we already know the format. We don't have to go back and discuss the cash book. No. We have already done it as a topic on its own. We have already done the topic of cash book on its own. Good. Now listen to this now. What about the general journal? What did I tell you? I told you the general journal is used to record any other transaction. Any other transaction that cannot be recorded in any other daybook. I gave you an example. When you purchase a motor vehicle on credit from General Motors, then you could not record that transaction in the sales daybook. Or you could not record it in the purchase daybook because you are not purchasing a good, you are purchasing a motor vehicle. Neither could you record it in the cash book because you are not buying by cash, you are buying on credit. Are you there? Good. Another transaction I gave you is when you sell motor vehicle maybe on credit too. Okay, sir. Okay. So again, you can't record it in the sales daybook because this motor vehicle or machinery is not a good. It's a fixed asset. Neither can you record it in the cash book because you are not selling that machine by cash. No. I've also given you other transactions that can be recorded here. For example, I told you when you are to correct an error, maybe an error has been committed and it has to be corrected. Okay, good. Listen, maybe ND adjustments. We have done the topic of ND adjustments like accruals and prepayments. When you have to do those adjustments, you can't do the adjustments directly in the account. Maybe there is an accrual or there is a prepayment. Those adjustments should first be done in the general journal. Okay, so have another subheading: general journal, general journal, general journal, general journal. Then you say this book is used to record. This book is used to record. This book is used to record any other transaction. This book is used to record any other transaction. Any other transaction that cannot be recorded. This book is used to record any other transaction that cannot be recorded in any other that cannot be recorded in any other book of original entry. In any other book of original entry. We'll stop, then you continue and say, examples of such transactions are, number one, purchase of a fixed asset on credit. Number one, purchase of fixed assets on credit. Purchase of fixed assets on credit. Purchase of fixed assets on credit. Number two, sale of fixed assets. Sale of fixed assets on credit. That's another use. Three, correction of errors. Correction of errors. When you commit an error in an account, you don't just go to the account directly and correct it. No. Correction of errors. Use the journals to correct errors. Whenever there's an error, you correct it. Listen, you correct it through the general journal. You record it first through before you go. For example, listen, let me mention this. Let us assume, listen, you sold goods by cash. Cash says shillings 2,000. When you sell goods by cash shillings 2,000, you're supposed to debit what? It is obvious you're supposed to debit cash. See, cash is increasing. You know the rules of double entry. Cash is increasing, you debit by 2,000. And sales are increasing. Revenue is increasing. So you're supposed to credit sales 2,000. Now listen. Suppose you did not record that sales as 2,000, but you recorded it as 200. You debited cash by 200 and you credited sales by 200. You committed an error. You cannot just come direct again and correct the error directly in the accounts. No. Before you come to the account and correct this error, first go through a book of original entry, which is called what? The journal. We shall look at the format. But before you correct, by the way, if I'm to correct this error, I'm supposed to come to the cash book or to the cash account and increase this amount by another how much? 1,800. Remember, the sales were 2,000. So if I recorded 200, I undercasted the cash sales by 18. So I make a correction, not by 2,000, I make a correction by 18. So I increase the 2,000 by 18 to make it 2,000. I increase this sales by another 18 and make it 2,000. So to correct this error, listen, I'm supposed to debit cash by 1,800 and I'm supposed to credit sales by 1,800. That is to correct the error. But I'm saying before I do this, I must do it in the journal first. Which journal? Not in the sales daybook, not in the purchases daybook, not in the return inwards daybook, not in the return outwards daybook, not in the cash book. I did an error of recording a transaction. So any transaction to correct an error, first use it or correct it in the journal, general journal. That's why we are saying number 3, correction of errors. Number 4, let's go on with the notes. End year adjustments. Call it them end year adjustments. Sorry, this is end year adjustments. End year adjustments. E.g., accruals and prepayments. Accruals and prepayments. We have done the topic of end year adjustments. Electricity could be accruing or owing. Electricity could be prepaid or whatever outstanding. Those are the adjustments. You don't do the adjustments directly to the account. You first do them through the journal. Good. Now let me show you the format now. Let me show you the format of the journal now. The general journal. Let me explain it. Now, when you have a general, or when you are required to prepare this book, we are calling the book of original entry called the general journal. Listen, again, it has a column for the date. It has a column for particulars. I want you to follow now. It has a column for debit and credit. This time, it has a column for debit and credit. I want you to listen. So let us assume we want to correct this error that we have just committed. Are you seeing it there? We recorded, umeambiwa by the question, cash sales of shillings 2,000 recorded in the books as 200. Cash sales of shillings 2,000 recorded in the books as shillings 200. So what have we agreed? You recorded it as 200, you debited cash by 200, that's okay. Remember, the account you debited is okay, it's correct. You credited sales by 200, that's okay. But the only mistake was you entered the correct accounts, but with the wrong amount. So we are correcting the amount, not the account. We are correcting the amount. So to make this 2,000, to make this 200 at 2,000, you come and increase it by debiting again by 18. So you are supposed to debit cash by 18 and credit sales by 18. Now listen. So when you are doing this general journal, whatever the date, maybe it was 5th January that you discovered the error, you will come and show. Listen, under the column of particulars, show the account to be debited, which is which one? Cash. Show the amount, 1,800. Are you there? Then show the account to be credited as the next line, sales. And the amount to be credited is how much? 18. So you are actually saying, to correct that error, I am going. When somebody looks at this journal, is saying you are going to debit cash by 18 and you are going to credit sales by how much? 18. Are you following? Listen. Listen now. Every journal, listen carefully now, every journal must have what we call a narration. Every journal must have a narration. Tell whoever reads your journal, what are you doing? By you debiting cash by 18, are you crediting sales by 18? What are you actually doing? So you are telling whoever reads this general journal that you are correcting the error. So you can come and say here, to correct an error of undercasting cash sales. Something of that nature. Okay? Then, once you're through with that, listen, once you're through with that, you go to the next transaction. Maybe, listen, you bought a motor vehicle on credit. You bought a machinery or a motor vehicle on credit from General Motor. I told you, if you are buying a motor vehicle on credit, can you record it in the purchases journal? No, it's not a good. Can you record it in the cash book? No, it is not. It is not a cash transaction. So where do I record it first? I record it in the general journal. But listen, I already know which account should be debited. When I buy a motor vehicle, I'm supposed to debit motor vehicle by maybe 2 million. Because motor vehicles are increasing, assets are increasing. The rule says when an asset increases, you debit. Then, listen, we owe General Motor that amount. We owe General Motor that amount. So General Motor to us is like a debtor. We owe. We did not owe General Motor before, Now we owe General Motors whatever the amount we owe them. Now we are saying that is an amount that we owe to General Motors. So our liability to General Motors has increased. We did not owe General Motors anything. Now we owe General Motors something. So you will open the account of General Motors now as a creditor. General Motors here as a liability now. This is a liability account. And the rule of liability, says when liability increases, you do what? You credit. So you come and credit General Motors. You come and see a 2,000. Obviously, you normally put the name of the other account. Here you come and say a motor vehicle. Here you normally come and say what? General Motors. But before you debit this motor vehicle and before you credit this General Motors account, you must have recorded this transaction somewhere. In where? In a daybook. Which daybook? The General Journal. Good. So for the second one, let us assume we bought the motor vehicle on 6th January. So you will show the account to be debited, which is which one? Motor vehicle. How much? 2 million. Show the account to be credited, which one? General Motors. General Motors. How much? On the credit column, put 2 million. Then I've said, every journal must have a narration. Every journal must have a narration. So here you can say to record. To record motor vehicle. To record motor vehicle. Motor vehicle purchased on credit. And by the way, let me just put it this way. In an exam, the examiner will not mark you wrong if you just came and said this. Okay. Let me just show it that way. To record motor vehicle purchased on, this is purchased on credit. Then you rule out. And then you go to the next one, that way. Okay? Good. So that is the format of the General Journal. Listen, it's an important format to remember because sometimes you're given questions purely of preparing this General Journal. Okay? That is important. Now, so I have said it is used to record the following. Sasa, andika hivi. The following, show this, andika hivi. The following is the format. The following is the format of the General Journal. The following is the format of the General Journal. The following is the format of the General Journal. So this is General Journal. Date, particulars, debit, credit. Good. So you are not showing a long one. No. We are not doing an example now. You are not showing a long one, just a small one. Because the aim for now is just to know the format. Which column is which one. Okay? Which column is which one. Are you there? Good. Now listen. Andika hapo chini. After you have shown the format. Andika hapo chini. Every journal entry should have a narration. Every journal entry should have a narration. Every journal entry should have a narration. Good. Then let's have an example. Andika hapo chini example. 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 Record the following transactions. Example. Record the following transactions in the general journal. Record the following transactions in the general journal. Record the following transactions in the general journal. Number one. Cash sales. Number one, cash sales on. Cash sales on 5th January. Cash sales on 5th January for shillings 2,000. Cash sales on 5th January of shillings 2,000 were recorded. Cash sales of shillings on 5th January of shillings 2,000 were recorded as shillings 200. As shillings 200. That's number one. Number two. On 6th January, purchased a motor vehicle. On 6th January, purchased a motor vehicle for shillings 2 million on credit. Purchased a motor vehicle, shillings 2 million on credit from General Motors. From General Motors. From General Motors. From General Motors. Good. So let's use those two to just illustrate. I have used them so that I don't have to write another journal. I have just used them so that I don't have to write another journal. So just copy this. Just copy that. Copy that very fast. Those are the two. The first one was cash sales of 2,000 recorded as 200. You must have debited cash by 200 instead of 2,000. To correct it, you debit cash again by the difference of 18. You credited sales by 200 instead of 2,000. To correct it, we are saying go increase 2,000 and make it 2,000. Go and increase the 200, make it 18. Make it 2,000. That's what we have done. Then there you can write to correct an error of undercasting cash sales. I have said every journal must have a narration. Listen, the narration is not standard. Different students will give different narrations, but you must tell the examiner what you are doing. Somebody else could have said, being the undercasting of sales corrected, but you have told it. The wording may not be necessarily the same, but you must tell the examiner what you are doing under narration. Okay. So number two, the 6th January one, I have debited motor vehicle because I bought it on credit. I've debited motor vehicle. I've credited General Motors by 2 million. By 2 million. Then I've recorded the transaction there. I've recorded the transaction there, which we have said to record motor vehicle purchased on credit. To record motor vehicle purchased on what? On credit. Good. Finish. Finish now. So we are through. Now listen. We are through with the books of original. The Daybooks. To finish, I want to develop the topic slightly. Finish, I want to develop the topic slightly now. Okay, now listen. I told you, listen carefully, that before you record these transactions in an account, you must first record them in a daybook. Then I told you, listen, when I was looking at the sales daybook, for example, here, where was it? Okay, fine. I think I've wrapped it, but I gave you some information here. Then I was telling you, sing here. If this is the sales daybook, you used it to record the goods that were sold on credit. So you say dear Kamau, you say dear Wekesa, you sold goods to Wekesa, you sold goods to Koril, and so on. When you sold goods to Kamau, you remember we were debiting Kamau. Where was it? Here. You can see it here. I debited Kamau. Where will I find, listen, where will I find the account of Kamau if I want to see it? You will find it in a ledger book somewhere. You will find it in a ledger book somewhere. Where will I find, listen, where will I find this account of return outwards or return inwards? In a ledger somewhere. Before a transaction is recorded in a ledger account, that transaction must first be recorded in a daybook. Now, what are the various types of ledgers? And first, what is a ledger? Now listen, a ledger, we are looking at types of ledgers now. Let me first explain. Sorry, this is types of ledgers. We also call them subsidiary ledgers. Let me just call them subsidiary ledgers. Now, you as a company, you sold goods to Kamau, Wekesa, Koril. All those guys are your debtors. Listen, they are all your debtors. So you will put all those debtors account in one book. So that if somebody opens page 1 of that book, he will find the account of Kamau. The way we have drawn it there, here. He will find this account of Kamau. He can be able to see it. Where was it? Here. Yes. If you sold goods to Kamau, you have his account somewhere in a book. If you have sold goods to Wekesa, you have his account somewhere in a book. So listen, in a ledger, that book that contains the account of debtors, all your debtors, you put them in one book. That book is called the debtors ledger, or we also call it the sales ledger. So page 1 of the sales ledger, you will find the account of Kamau appearing this way. So under the folio column now, maybe I can explain it. Under the folio column here, somebody going to the sales ledger page 1, or what I'm calling the debtors ledger page 1, he will find the account of who? Kamau, as it appears here. If he goes to page 2 of the debtors ledger, he will find the account of Wekesa. You sold goods to Wekesa. That's what you put under the folio. So this folio column is just to help for reference. Somebody wanting to know very fast, where can I see the account of Kamau? Let him go to the sales ledger, or we are calling it the debtors ledger. Okay? So a debtors ledger is one type of ledger. It contains all the accounts of debtors. Page 1, page 2, page 3. If you have 200 debtors, you will have 200 pages in your debtors ledger for those guys. Okay? Now, assuming now we are purchasing, not selling. we are purchasing goods on credit. Like I had here, we purchased goods on credit from Wekesa here. Wekesa was a creditor. So I told you, when you purchase goods on credit, you normally debit purchases, okay, and you credit creditors here. But before I debit purchases and before I credit Wekesa as a creditor, I must have recorded that transaction in a daybook. What is that daybook? What we have called the sales and the purchases daybook. We have also called it what? The purchases journal. So again, in the folio column, somebody wanting to know, this is purchases daybook now. Somebody wanting to look at the account of Kamau, where can he get it? Kamau now as a creditor. He wants to look at Kamau, our Wekesa's account as a creditor. Where can he get it? He will get it in a book or a ledger. That ledger, listen, that ledger that contains the account of all your creditors, we call it the creditors ledger. We also call it the purchases ledger. So page 1, you will find this account of Wekesa as a creditor. This one. You will find this account of creditor called Wekesa. Anything affecting Wekesa went to that account. Whether he's returning or purchasing, anything affecting him. If you want to go to see it, go to the creditors ledger page 1. If you want to see the account of Kamau as a creditor, go to page 2 maybe, page 3, page 4, page 5. So we are saying, after, that's what I wanted to mention here, after you have recorded the books in the transactions, in the books of original entry, they will now be transferred to the ledgers. What are the different types of ledgers? One type of ledger is what we are calling the debtors, or we call it the sales ledger. I've told you this contains all the accounts of who? Of debtors. Number 2, purchases, or we can call it creditors ledger. Creditors, we also call it purchases. This is creditors. We also call it the purchases ledger. It contains which account? All the accounts of creditors. Page 1, you will find the account of creditor called Wekesa. Page 2, Wanyonyi as a creditor. Page 3, and so on. Good. Next, another type of ledger is what we call the general ledger. We also know it. It's also called the nominal ledger. Listen, this ledger contains all other accounts. All other accounts. For example, when I sell goods on credit, I'll be required to open a sales account. That sales account did not go to the debtors ledger. Debtors ledger went to the debtors. Debtors only. Debtors only. But it affected, when I sold goods on credit, it affected sales. So I can't put the sales account in the debtors ledger. I only put the account of Kamau, the account of Wanyonyi as a debtor, and so on. But what about the sales? I put it in the general journal, or what we call the nominal ledger. Okay? When I purchase goods on credit, I debit purchases and I credit creditors. All my creditors have been put in a book called creditors ledger, or what we have called purchases ledger. But where is the account of purchases? That account of purchases, I've told you, I can't put it in the creditors ledger. But that creditors ledger affected purchases. But where will I find the account of purchases? I will find it in the general ledger. If I want to find the account of electricity, water, insurance, telephone, depreciation, where can I find them? I can't find them in the debtors ledger. I can't find them in the creditors ledger. I'll find them in the general ledger, or what we are calling the nominal ledger. Okay, good. So let's put down these types of subsidiary ledgers. Put down a subtopic, types of subsidiary ledgers, or just types of ledgers. Types of ledgers or subsidiary ledgers. Types of subsidiary ledgers. Then you say this. Say this. Once the entries are recorded, in the books of original entry, once entries are recorded in the books of original entries, once books are recorded in the books of original entries, they are transferred to the ledgers. They are transferred to the ledgers and recorded. They are transferred to the ledgers and recorded on a double entry system. On a double entry system. Another paragraph. Another paragraph. A ledger is a book. A ledger is a book that contains. A ledger is a book that contains. A ledger is a book that contains accounts of a similar nature. A ledger is a book that contains accounts of a similar nature. Accounts of a similar nature. A ledger is a book that contains accounts of a similar nature. Another paragraph. The following are the various types of ledgers. The following are the various types of ledgers. Following are the various types of ledgers. 1. Debtors stroke sales ledger. Debtors stroke sales ledger. Debtors stroke sales ledger. Put a dash. This contains the personal accounts of debtors. 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 Number two, creditors stroke purchases ledger. Creditors stroke purchases ledger. Creditors stroke purchases ledger. Purchases ledger. When you see this, put a dash. This contains the personal accounts of creditors. This contains the personal accounts of creditors. Number three, general stroke nominal ledger. Number 3, general stroke nominal ledger. General stroke nominal ledger. Put a dash. This contains all the remaining accounts. This contains all the remaining accounts. This contains all the remaining accounts not recorded. All the remaining accounts not recorded in any other ledger. This contains all the other accounts all the remaining accounts not recorded in any other ledger. In any other ledger. Good. That's all for now. So I want to do a question. On how to record some of the journals. The topic is books of